Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, I am going to continue to work with the Hilbert Transform series of indicators. Today it's the turn of Hilbert Transform Phasor components. This indicator is based on two components which are derived using the Hilbert transform method, and using these two components we can look at the price dynamic in a novel way to see what is happening. If the trend is strong or if the things are sideways, we can draw the inference and think about the optimum entry and exit points depending on the current prevailing scenario. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. There is the USD JPY chart with the each candle break at defined at hourly. And on the lower side, I have added the Hilbert transform phasor components. And as I said in my introductory remarks, we have two components for these indicator with these in phase component and quadrature component. So using these two, we can look at these price scenarios, price action, price series data. Now, we will not go into the calculation part of this indicator. You can simply do a quick search on the internet and you will get the precise formula, exact formula. Now, these are the times of AI search, and with not much amount trouble, you will get the exact formula. Here, we will deal mostly with the application part of this indicator, how we can utilize this particular indicator and its methodology to look for the optimum trading opportunities in the market. So let us now consider this application with some of the examples. The underlying logic is that if we have these two lines of the two components of this indicator converging closer to the similar level, then we consider that to be the sign of the strong trend, and of course we have to consider the direction of the in phase component as well as quadrature component. But the main thing is that there should not be much of a difference between these two lines, and if the convergence is there, that is indicative of the strong trend. And when there is divergence, when the quadrature component and the in-phase component are moving apart, or already there is quite a distance in relative term, because you can't really plot these absolute in absolute terms. So we always have to consider it in relative terms. So we will have to do some observation and figure out what are the levels which we can confidently say that these are the levels which are showing the divergence in phase component and quadrature component. For otherwise, we have to rely on these narrow gap, and if we don't really have much of a gap in between these two components, then that is indicative of a strong movement in either direction. And to figure out the directional basis, we will have to consider the way the in-phase component and the quadrature component is moving. In general, if both of these components are moving downwards, then that is indicative of the bearishness. And of course, as I said, the divergence should not be there. These two output values should be fairly close, pretty close to one another, and moving in a similar direction. And when we see these in-phase component and the quadrature component moving upwards with very little gap, then that is indicative of the bullish momentum. And if there is a gap, there is already a divergence in place, we will have these. gap, and there is not much of an alignment in terms of the direction also. That is indicative, that is more indicative of the sideways direction lessness of the underlying instruments price moves. So we will do well, sit on the sidelines till the moment the time emerges where there is convergence of these two components and a strong move on either side. So, for example, if we consider the price move in today's session for last couple of hours here, we had these convergence and divergence. Both these things have happened with price moves and this plotting giving us useful information of the prevailing price dynamic for the USD JPY. So if we go back earlier in the day, here we had this strong move where both these components, the in phase and the quadrature components, were aligned, were moving fairly close to one another and in the same direction or downward. But then, after things stabilized, we saw this divergence taking shape for these two components, and after a span of consolidation, as it started to move upward again, we saw these two components moving fairly close to one another and starting to move upward, indicating the bullishness of these USD KPY. And this bullishness lasted till 11 GMT, and that is where these Phasor component turned the corner from higher side to the lower side, but there was this divergence in place, so that would have given us the indicativeness, the indication that these two components are now converging, and again we can expect a move on the downward side. But since there was not much of a clarity, and here at this time of convergence, we had the in phase component moving upward, but this quadrature component had moved quite swiftly nearby, and in no time it again changed the direction. So that would have indicated the sideways nature of these price action data, and even now the USD GPY is only going sideways. There is lack of momentum on either side. So it is better for us to simply sit on the sidelines, allow the things to stabilize, and once we get the indication that now a strong trade is developing, it can be either on the upside or on the downside. We can think about getting involved for the new trade. So here we consider today's price action to draw the meaningful inference. Same thing you can apply to prior data, and you will see these playing out on most of the occasions. Of course, not all the time, not all the components of these indicators are going to be aligned, and we will have to go for these setups with the possibility of also making mistake, because no indicator is perfect. The same thing applies for this indicator also. Not all the time it is going to bring us profit. Some of the trades are going to end up in loss nonetheless. So we will have to be careful and try to figure out the best possible opportunities where we feel that the risk reward ratio is also favorable. So even in the scenario of we getting the trade wrong, we should not be losing too much of our money. So that is the essential requirement with, while working with these indicators also. If we consider some more examples, let's consider what was happening in yesterday's session. So here we had this strong move earlier in the day, and after that things stabilized and went sideways. So we saw, as expected here, the convergence and alignment of both of these components, the phasor in phase components as well as potential component, and moving upward. But very soon these indicated also the corner, and we had this divergence where both of these components moved far apart, and it again started to converge, and only after the alignment of the direction matched and both of these were moving in a same fashion, we saw this alignment somewhere around here, and that is where the momentum picked up. The bearishness overwhelmed and pushed the USD on the lower side. So that would have signaled to us the beginning of a new bearish trend, a strong bearish trend, and that would have been a possibility for us to make money to profit from this strong trend. So I think here now my job is done unless you have any queries or any question to ask, and I am pretty much available here for answering the query. So any of you, if you have any query, do write to me the feedback, and I will be more than happy to take the discussion forward. Now, if there is nothing more to explain and queries, I think I should be signing off for the day. And with this indicator, I am hopeful that you would try it out, see how you can utilize this indicator for figuring out the optimum trading opportunities and take advantage of the Hilbert transform phasor component indicator, which is based on a very sound mathematical logic and easy to interpret design, where we can simply look at the convergence and the divergence of these two components and draw a meaningful inference of these prevailing price dynamic. So that's all from my side for today's session. I will be back tomorrow, not tomorrow, on Monday after the weekend with a equally interesting indicator to work with. So do come back. See you next time around. Till then, goodbye. Have a fabulous day and weekend. See you on Monday. Thank you.